All right, it's 8 o'clock. I always have some people come in a little late, but I have everything up here and ready. So let me see. We're gonna at least get started. So I know, like for you, Lisa, I think your son's thinking about purchasing a home.
That's right. He's supposed to been logging on too.
Yep, that's fine. We always have some people that come in a little later on.
Got it. Got it.
I know. I'm gonna give it a few minutes to see if anybody else come in. All right, we got one more coming. All right. Hi, Grace. Good evening. All right. Now, how old is your son, Lisa?
Stevie is 27 now.
Oh God. Okay.
Yeah, you getting old.
That part that said that, I'm like, oh, is that me or is that you? But okay, no, we just play. Yeah, it's definitely time for him to start having a conversation.
Absolutely.
All right, cool. Well, I do have the meeting recorded. I usually post it on YouTube and then send it out as well. So just for time's sake purposes, we'll go ahead and get started. And anybody else that comes in, they will definitely just join us. But just a little bit about myself. I am Chris Britt Woods. I am a licensed realtor here in Richmond, Virginia. I am also an investor. And I wholeheartedly believe in real estate just being one of the vehicles, pathways to wealth. So I am passionate about real estate. I'm looking to learn about different avenues, but that's enough about me. So I like to teach other people how to grow and build wealth in real estate. You got to start with one home to get your dream home. So that's kind of how we grow here. So that's just a little bit about myself and how I work. I've been in real estate going on 8 years and I do it full time, thankfully. So I'm pretty well versed in the industry. If you have any questions, feel free to stop me along the way, hop off mute, all that good stuff, and we will go ahead and get started. Let's see. Oh, it's not going. Hold on. There we go. All right. So the first thing we typically look at is what the lenders look for in terms of credit, because this is the number one question. This was where everyone gets started. When you're purchasing a home, income and credit are the two biggest factors. Of course, they do look at your monthly expenses, so that's how they calculate debt to income. But in terms of credit, we do have programs that start as low as a 580. That's going to be the FHA program. It is very friendly to first time home buyers. We'll talk more about the requirements there. But once you get into like the 620, 640 range, that's when you qualify for the first time home buyers. All right, hold on. We got some more coming. All right, cool. So once you get into the 620, 640 range, that is how you qualify for the first time home buyer programs, the grant programs, Virginia Housing. We have homes. So some of those are some of the most common ones in our area, and we'll definitely talk about those. Once you get to 680 and above, you pretty much are open in terms of financing. So you can do conventional, which tends to be lower in terms of monthly payment, but of course, the stipulations to get there are a little bit higher. So, the things that we look at specifically, payment history. For most of the loans, you cannot have a late payment within a 12-month rolling period. So the earlier you get started in the process, definitely the better. That way, if you do have, one or two late payments that need to fall off, you have time to work on it. Credit card utilization, typically they're looking for 30% or below. And that's just overall. So if you have, a little bit more on one card versus the other, then we can definitely work with the lenders on, paying one down or moving some of it over. So that's why we just encourage you to get with the loan officer early on in the process, and that way you can get a better idea of where you stand and what you need to do. And then, of course, positive payments. We do not like to see a lot of new accounts, but old accounts that are in good standing always show well on your credit report. And then, last but not least, things happen. We definitely understand that. So if you do have late payments, medical bills, things like that, they do give you the opportunity to do what we call a letter of explanation. Letter of explanation. So basically, you can just explain your past issues, what happened. It's kind of like we put it together and it's like, hey, during this time I was sick, I was unemployed, whatever the case may be. But since then, I have had, on time positive payments. And that's basically what the letter of explanation says. Nothing fancy, but they will require that in some cases. And then just know you cannot have any open collections, charge-offs, or judgments. But if they are paid off, then we can definitely work with those. So just keep in mind things happen. We definitely understand that. You do not have to have perfect credit to buy a house. I think that's the most important thing to remember because, people feel like you got to have a 720 credit score, and that is not the case. We have a lot of homeowners that have, blemishes on their credit and they still make it through the process. It's just about getting with the lender early and having the conversation, coming up with that individualized game plan so that you can move forward and, obtain your goal of home ownership. Any questions on what the lenders are looking for? All right. We'll keep rolling. If y'all have any questions, again, just hop off of mute. I know we had one or two people come in. So if you have any questions, feel free to chime in at any time. All right. So these are all right, so yes, if you do have credit challenges, the first thing we do is, of course, review your credit report. So our loan partners, and I do have some new construction partners as well that have like home buyer programs, so they will work with you to actually dispute inaccuracies on your credit report, as well as do like those strategic pay downs that we talked about. So if one credit card balance is higher than the other, another thing that we have been running into recently is student loans. So they will work with you as well on that as long as you have like an income-based repayment plan or, something in place, then again, everyone has student loans. We can definitely work with that. And then we will work with you to just build positive credit history. So there are different things out there like secured credit cards. There are some programs that will actually report your rent. So that becomes a trade line on your credit report. Of course, that can boost your credit score as long as you have been paying your rent on time. So that's just one of the many ways that, we can help you build positive history as well. Any questions on credit?
Nope.
All right, we'll keep on rolling. So, pre-approval, this is what you will need to get started. You can go on Rocket Mortgage or something like that, type in some numbers, and they will give you a pre-qualification letter. But they do not verify your income, your employment, or anything like that. With a certified mortgage loan officer here, they will actually look at, and these are the things that they're going to look for: 2 years of tax returns, 30 days of pay stubs, 2 months of bank statements, your photo ID, social security card, and proof of employment. Um, any income that you intend to use to purchase a home, whether it be a part time job, Some people have disability or any additional income. Just know that you will need to provide documentation and everything is going to be verified. So any funds that you intend to use in a transaction, they do have to know where they come from, just so definitely keep that in mind. Pre-approval letters are typically good for about 60 to 90 days. After that, all you have to do is update your documents with the loan officer, and they can typically update your pre-approval as long as there hasn't been any major changes. Things to keep in mind when you're doing the pre-approval process. You do not want to necessarily switch jobs if you don't have to. However, if you are fortunate enough to get a job that pays more, that is okay. We just do not want to see more than a 30-day gap between jobs. So changing jobs is totally acceptable, especially if you're fortunate enough to be making more money. But again, no more than 30 days of unemployment, because after 30 days, it kind of starts the clock over and you have to be working for at least a year in order to purchase a home. Do not open new accounts, new credit cards, or make large purchases either apply when applying for a home as well as when you are under contract for a home. So these things can affect your credit score as well as your debt to income ratio, which can change the terms of the loan, and in some cases it can even disqualify you. So definitely keep that in mind in terms of things not to do. But if you are thinking about starting the process, these are the documents that you would at least want to go ahead and start to gather. And I'll be sure to send these slides to everyone that registered when we're done, so that way you can just have an idea of what you need to get started. All right, so now we're going to dive into the fun things. So, this is the different loan types and some of the different programs that you can qualify for, whether you are a first-time home buyer or whether you are a repeat buyer. The most common one is conventional loans. That's what, most people think that you need in order to purchase a home. But truthfully, a conventional loan, they have some that go as low as 3% down, and then they have some that are even 5% down. So you do not need a 20% down for a conventional loan. It says 620, but it's really closer to 640, sometimes 680, depending on the bank. So I do need to update that. And then for FHA loans, again, those are the loans that most of our first time home buyers go with. You can do a 580 credit score, but with that one, you do have to put down 3.5%. And just being honest, at a 580 credit score, you are not going to necessarily qualify for some of the grant programs and the home buyer assistance programs. So a lot of times, if you get with a lender and you are at a 580 credit score and say you have, 6 months maybe before your lease is up, then we will work with you to get you up to that 620 so that you can hopefully get some of those assistance programs. So again, it's never too early to start the conversation. For our veterans and active military, do we have any veterans active military on the call this evening? All right, not today, not this week. But if you know anybody, they do get 100% financing. So definitely just keep that in mind. And then USDA loans. So this one is good if you are looking for something in like a rural area. So with USDA, just kind of think of the USDA stamp that you see in the grocery store on, like meat. It's farming, rural areas. So for us, that is Powhatan, Dinwiddie, maybe some areas of southern Chesterfield, and just further out. You're not going to find USDA loans in Richmond, But if you are interested in something that is a little bit further out, they do offer zero down, so it's 100% financing. Now, of course, we'll talk more about that because you will still have to come up with closing costs. But if it's 100% financing, that will reduce the amount that you need as a buyer to get into the home. So definitely just an option to keep in mind. And then this one, let's see, down at the bottom, Virginia Housing. It is like a program of its own. And I'm going to explain it to you the way that it was explained to me. So basically, with Virginia Housing, all of these loans are like a candy bar. And with Virginia Housing, it's kind of like the wrapper. So it can be wrapped on just about any loan type, but it helps with down payment. So it's not going to be on a USDA or VA because they are 100% financing. But with your FHA and your conventional loans, you can wrap it with Virginia Housing. Um, it is the Virginia Housing that you see right there on, what is that, Belvedere when you cross the bridge. They offer different grant programs. So the most common ones that they do, they either do a 100% financing option, which if you have to pay 3% down, for example, then you will have a second mortgage for that 3% down. So you will have another mortgage payment, maybe $40, $50 or something like that. But when it comes to purchasing the home and getting into the home, you do not have to have that money out of pocket. So that is an additional option. And then the second one that they do that is very common is the down payment assistance. And this is what most people shoot for. With this one, they give you a grant for everything except for 1%. Basically, with that 1%, they want you to have, some skin in the game. They want you to be invested as well. So they start, so for example, again, if you're doing a 3% down loan, they would give you a grant for 2%, and then you would put down 1%. You can also wrap it with FHA. So if it's 3.5% down, they would give you the grant for 2.5%, and then you would just do the 1% down. So that is a very popular program here in Virginia that a lot of people, strive for. But full disclosure, it does have income restrictions, and you have to have a 620 credit score. Any questions on the loan types or Virginia housing? All right, we got a quiet group this evening. We'll
I just
keep.
have a question about the Virginia housing.
All right, go ahead.
Yeah, how does that affect your loan itself for your home ownership? Does it give do you have to stay in the house a certain time frame with that Virginia housing loan when you get those grants, or how does how does that work?
So, no, with Virginia housing, you do not have to necessarily stay in the home for any specific time. It has to be your primary residence.
Okay.
So if you go to sell the home, you do not have to pay back the grant.
Mm-hmm.
If you have the second mortgage, then that will have to be paid off in addition to your first mortgage.
Okay. Okay. I knew there was some type of stipulations there. Okay. All right. Got it.
All right. So once we get pre-approved and you determine which financing option you go with, just to backtrack for a moment, when you put in your loan application, that is when your mortgage lender will typically discuss grant programs with you, just because Really and truthfully, there are a lot of programs. I could think of five just like right off the top of my head between Virginia Housing, Home, Spark, we have Chenoa Fund, Project Homes has a program. So like and each one has different overlays in terms of credit, in terms of income, people in the household. Some of them are specific to neighborhoods. So once the lender can see your credit score, your income and debt to income ratio, then they can give you some options in terms of what programs may be a good fit for you. And I encourage you to do that rather than try to look into each program individually because, again, there are so many. Virginia Housing is the largest one that we do, and they do offer a free class. I'll be sure to include the link, make a note to myself, include the link in the follow-up email so that everyone has it. And then once we get pre-approved and we're ready to look at homes, and this is the process for that. So, here's what to expect. It's usually about 30 to 60 days, depending on how quickly you find a home and everything. But once you get pre-approved, everything typically moves a lot faster at that point. So when you're pre-approved, they will give you your pre-approval amount, and we use that as our shopping budget. So if you're pre-approved for 325, then we'll look at homes 325 and under. Um, Once we go out and find something, we will make an offer. We do research before we submit our offer. So we look at what the other homes in the neighborhood have sold for, as well as the condition of the property that we are making an offer on. And then we make an offer, based on those things. And of course, wherever you're comfortable as well, because um, while it does have to appraise, it's really valued at what it's valued to you as the buyer at that point. So we definitely take our time, put together our offer, submit that, and then once we submit it, they have three options. They can either accept it the way that it is. If they do not like the terms, then they can simply decline the offer. And then the third option is they can counter. So we do a lot of negotiating in real estate. I say everything in real estate is a negotiation. Um, but ultimately we come to terms. Once everyone comes to terms, the offer then becomes a legally binding contract. And I like to emphasize that because I want you to be certain and sure before you put an offer in on a home. You do have to put a deposit down with the offer. It does go towards the transaction. So when you get to the closing table, that deposit is subtracted from what you are required to bring to closing. But that is, money out of pocket. So just make sure that you are certain before you submit an offer. And we will definitely have that conversation again once we get out in the market. Once your offer is accepted, congratulations. You would do a home inspection. Full disclosure, I do have to let you know that the home inspection is optional. However, I highly encourage and recommend that you get a home inspection. You wouldn't buy a used car without taking it for a test drive. It's really kind of like the same concept. When we look at the house, of course, you can turn the sink on and things like that, but when we have a home inspection, they go up on the roof, they check the plumbing in the crawl space, they look at the electrical, as well as they test all of the appliances and the HVAC system. And then they give us a full report on the condition of the home. It's typically a pretty long report. It is their job to find things. So do not be alarmed. But again, we can use that to negotiate. So if there are major defects, then we can ask the seller to correct those defects, or we can ask for a credit in place of those defects. So if we do a credit, that would be less money that you would have to bring to the closing table. And the thought process behind that is you would then use that money to take care of the items yourself. But that is a important process, important step in the home buying process. The home inspection costs usually about $500. It does vary depending on the size of the home. And then, of course, you can add on additional inspections. So you can do a chimney inspection, you can do a pool inspection if you have a pool, or if you have a basement or you have gas and you want to do a carbon monoxide test, they can do those. Of course, each additional inspection is a fee, and as the buyer, it is your responsibility. But depending on the home and what we see and what's there, then we can, prepare if we need any additional inspections. We usually have about seven, sometimes 10 days, depending on the contract, to conduct our inspection and ask for any repairs or anything. Any questions on the home inspection process? Um, All right, I keep rolling. And then after the inspection, the second biggest contingency is the appraisal. The appraisal is ordered by your loan officer. The loan officer will order the appraisal. They reassess the property value to make sure that you are not overpaying for it. So again, that is why when we put in our offer, we do some initial homework so that we are prepared for the appraisal. That way, if we put an offer in and we go into contract at 325, we want to appraise for at least 325. If we appraise for 335, congratulations, you have, an instant $10,000 in equity. And then if we appraise for less than that, then we have to negotiate again. So we typically reduce the price to the appraised value. But everything is a negotiation. Everything is kind of like on a case by case scenario. But ultimately, we come to terms. And if we do not come to terms for either the appraisal or the home inspection, and the contract is terminated, then you do get your deposit back. So I do just want to put that out there. But if everything goes well, Lord willing, everything will go well, we will go to final underwriting. This is done by your loan officer. They're going to be needing your updated bank stubs. They're going to need your updated um, pay no bank statements and pay stubs along with any other documentation. Student loans is a big one. um, Credit card statements, whatever they need at that point. um, Full disclosure, I like to tell people that legally they have to check your credit and verify your employment within 72 hours of closing. So they check it in the beginning and then they check it again right before closing just to make sure that you are still employed and make sure that you have not opened any credit cards or anything like that. So again, it's very important to keep that in mind while you're under contract. Now, once you sign on that dotted line, you are more than welcome to go over to Haynes and open a line of credit for furniture for the whole house. But I promise you, I have had people, get furniture for the house and have to take it back because it's like if you, keep that sofa, we're not going to be able to close and you're not going to have a house to put it in too. So just be careful of that. Be very mindful of that. But Lord willing, everything goes well. You're under contract for usually about 30 to 45 days. And then we make it to closing day. Closing day occurs on a between a Monday and Friday, excluding holidays. It has to be when the courthouse is open so that once you sign everything, then they can record the closing at the courthouse and you officially become a homeowner. That process in itself takes about an hour. And prior to closing, we do a final walkthrough of the property just to make sure that everything is up to par. Make sure that if we ask for any repairs during the inspection period, that they have been completed. And then we head over to closing. You do take possession of the property at closing. So once you leave the closing table, you can go over there, you can start moving things in, you can rip the carpet up, whatever you choose to do. But on closing day, you do take possession of the property. So we typically do a little celebration and everything that day. It's a pretty big day. Any questions about the process and just kind of what to expect?
Nope.
Thank you. All righty, Lisa. Thank you. You my talk back person tonight. I appreciate
Not a problem.
it. Um, and then of course we always get a lot of questions on the affordable housing program. So full disclosure, the affordable housing programs typically apply to first time home buyers. We have Henrico has a really great affordable housing program going on right now. Um, about 2 years ago, they set aside like $60 million. They have had townhouse communities. Um, the crossings at, well, I'll tell you because that's my success story at the bottom. But the crossings at Marlboro, they're giving like $100,000 grant from Henrico. So the programs run differently in different neighborhoods, but they do have a new single family community that they are building out in Varina right off of what is that, New Market Road. I think it's like Riverside East or something like that. But that is part of the affordable housing program. So those are going to be single family homes that are starting in the I want to say 300,000s, which is good for a single family home because that's typically where the townhouses start. But again, it is new construction. So it's going to be really nice when it's done. And there are other communities for the Henrico Affordable Housing as well. So you can definitely look that up. And I'll be sure we include the link for that in there. All right, and then let's see, we have the builder incentive. So if you do decide to go new construction, a lot of the builders do give out like discounted interest rates as well as builder paid closing costs. So that is for first time as well as repeat home buyers. Um, a lot of people think that new construction is harder to get into, and truthfully, it's probably easier to get into just because you are not necessarily competing with anyone and they have inventory that they are looking to sell. So sometimes you can get a good deal with new construction. Of course, each builder is different. So we can certainly narrow it down just based on the area you want to be in as well as your budget and kind of go from there. Another one we have that is popular is the FHLB grant. So that's the Federal Home Loan Bank. They just ran out of funds for that, but they will bring it back probably like somewhere between August, September, October. It's hard to say. It usually comes out 2 or 3 times a year, and they give like 15,000 to first-time home buyers, and then up to 20,000 if you are what we call a community service partner. And we can, if you work in a community service field, then we will consider you a partner because, just because you're not a doctor or a nurse, you might be maintenance at the hospital, but we need maintenance, to keep the hospital going. So we like to consider everyone, take everybody in as much as possible. So we do like to. There are a lot of programs for the community service partners, so definitely keep that in mind. And then I know this is really exciting. This is one of my most successful success stories. This client closed in December. She was a first-time home buyer. She actually combined some of the programs. So she did a new construction townhome in the Crossings at Marlbury with the affordable housing program. She got $100,000 from Henrico. Then because it was new construction, the builder gave her $20,000 towards closing costs that she was able to use, to buy down. Actually, she used some of it for design and things like that because it was new construction. Her closing cost was not quite $20,000, but she was able to use the remainder of those funds as well. And then she attended a class through the Better Housing Coalition. They still have this class going on, so I will be sure to include the link in the follow-up email. But it is a 1 day class, and if you go to it and you have a pre-approval letter, then they will give you a check for $1,000. You can use that for your deposit, your home inspection, whatever. You do have to have the pre-approval letter in order to get the check, but you do not have to be under contract. So, do with that information whatever you like. But I know that they have a class coming up on April the 23rd, which I want to say is like a Wednesday or a Thursday, but the class in May is going to be on a Saturday. So it just depends on your schedule, but I will be sure to include the link for that. Any questions on the programs? Okay.
Yep.
All right, what you got?
So when you attend those first time home buyer classes and or a grant class, I don't know which one Stephen took. I don't know if he can come off a mute as well, but he has a certificate for one of those classes he's taken. But how long does those certificates last for? Because that's been probably a year and a half, 2 years.
If I had to guess, it would be the Virginia Housing Program.
Mm-hmm.
And that certificate is good for 2 years.
Okay. All right. I think his might have expired because I think it might have been 2 years already.
It
Yeah,
is
it's been 2 years.
very
How
easy.
long, Stephen?
Yeah, it's been past 2 years.
Okay.
Okay.
Yep.
No worries. It's very easy. So they have in-person classes that they have different days of the week and on the weekends. And then they also have it online where you can do it self-paced and get the certificate. Um, It is very informative. Definitely does not hurt to take the class. And if you qualify for Virginia housing, they do require you to take the class. So if you already have the certificate, then that is helpful.
Sounds good.
All right. So here's how we come in. Here's what we help you do, whether you're ready now or ready in, 3 to 12 months. We do have credit repair, we have loan partners, and of course, real estate guidance to help come up with that customized game plan. That's what I tell, all of my people because everyone's situation is different. So I think it's very important to realize that, and it's hard to have a conversation about where you stand without actually looking at your credit report and your income and knowing where you stand. My first step is to always get you connected with one of the loan partners. They will review your credit as well as your income, let you know if there's anything that you need to do to improve, or you might be more ready than you think. And, they will give you an approval letter that you can use when you get ready. So if you're in a lease, you can plan accordingly. A lot of times you have to give them 60 days notice. So if you wait until, 60 days, then we really get into a time crunch. So the biggest thing I like to tell people is it is never too early to have the conversation. It is free to have the conversation. And I have loan partners that do not have to do a hard pull. So they can do a soft pull. Like it does not hurt to have the conversation. And then, of course, this is myself. If you want to book a call with me, there's my information. And of course, I will follow up with everyone here for the evening and send out the Virginia housing link, as well as the Henrico affordable housing link and the Better Coalition class where they are giving out that $1,000 certificate. Any questions this evening?
Nope.
No. All right. Well, I hope everyone learned something. I definitely want to thank everyone for taking the time out this evening and hopping on here. And we do this once a month. It's typically the first Wednesday of the month, but last week everyone was on spring break, so we did it this week. But we'll be back next month. So if you know anyone who's looking for the information, feel free to share.
All
Thank
right.
you.
Nice.
Have a good night.
Thank you, ma'am.
Thank you.
Appreciate it.
Thanks.
Mhm.
Bye.